Welcome to the Lounge of Travefy Academy, where we get to hear from travel industry voices and experts to learn more about their story and what they see on the horizon for travel professionals. And I'm Stephanie Grice, and our guest today is Haylie Hardin, who is owner and operator of Go Hardin, and our resident tax expert is what I'm going to dub you now. So welcome to the Lounge, Haylie. It's so
Thank
good to have you to join
you.
us.
So excited to be here. Appreciate it.
I know. I'm really excited to have you here today because, we all know how important this conversation is. And it's a rare one for us to have, and it's because we talk so much about, just the travel industry and all this stuff. But guess what, though? You all listening are still running a business. So it's very vital that you understand the taxes and all the things that are involved on the business. And you're an entrepreneur. So understanding all that. So that's why we brought Haylie in today. And I'm super excited to have you because I got to meet Haylie at the ALG Vacation Ascend conference earlier this year, or a few months ago, and right away I was like, "Oh, you are perfect for this podcast. We need to have you on here because this is a topic we just rarely touch, and it's so important." So, thank you for spending time with us here today.
Absolutely. So happy to be here.
Yeah, it's gonna be cool, and I know, like, we'll get into all the tax tips, but before we do that, though, can you just share more about yourself and how you started your business?
Absolutely. So I've been a CPA coming on 10 years now, which is crazy. I started my time over at Ernst& Young being an auditor, like a lot of us do. Then I decided to jump ship and start my own business with the help of my dad, who's also an accountant, and my cousin. So we are a family-owned business located in Austin, Texas. We specialize working with small business owners, and I've had this opportunity to really kind of get into the travel agent group. I don't know how it happened, but I love it. You guys have the best parties and the best energy, of course. And so I help people like the listeners of this podcast navigate the complexities of compliance and tax so that we don't have to worry about it anymore and you can focus on your business and your clients.
That's awesome, and I do have to say we do like to have a good time in the travel industry. That is for
Well,
sure.
after going to Ascend, I realized that that's where the party is. It's not the tax group, but that's okay. That's okay. I like to be invited to both.
But we will invite you in because we need to do taxes
Beautiful.
also, so it's
We
perfect.
do, we do. And that's why I'm really excited about today's topic because it might not be the most fun conversation, but it's so relevant to every single one of us and is such a headache to a lot of business owners. So to even have these high level conversations so that we can kind of demystify some of this stuff, I think is going to be really helpful, especially at year end when we're all thinking about it.
That's so true. I know we'll get into this about the calendar of basically the dates you need to know, but that's why
Yeah,
this is also perfect. We did not intentionally do this, and then when you said like, "Oh, this is the perfect time," I'm like, "Oh, we need to get this podcast out there ASAP," because it is.
absolutely.
It's such perfect timing, and I love how you're going to break down just top tips too. I think that's really helpful and really digestible. And so I got to ask you, like, what is the first tip? Like, is the first tip like? I mean, they're all very important, but is this like, this is a very important tip?
Well, I think in this industry, this is the tip because of the
Mm,
nature of what we're all doing. So I thought we would start off with how we can have a tax deduction for some of the business traveling that we're doing at Ascend. And just general conversations I have is as a travel agent, is everything I do a business deduction? The answer is maybe not, but we can try our best too. And so I like to start there is what is a business travel expense? And I'd like to just start with the fact that there's the difference between an expense, which is what you're paying, but what we can actually deduct. So I'm going to lead this conversation with what the IRS is going to allow you to deduct. So first off, the expense needs to be ordinary and necessary. I use that example if you can go to Mexico City and you can stay at like a normal hotel and make do with that, that is ordinary and necessary. If you decide to upgrade to the Four Seasons, which by the way, I hear is amazing in Mexico City, that might be considered lavish and something the IRS would not feel appropriate to deduct. So heads up. But that being said, your flights to and from a business trip are 100% deductible. The hotel is definitely as well. Any tips that you spend out of pocket are a deduction. Um, Something I'd like to bring up to people, especially in this industry, is what happens if you brought your spouse with you and they don't work in the business. A lot of people think, oh, it's a business deduction because they're a part of my team, but maybe they're just helping you out for fun. They're joining the trip. So that their flight would not be a business deduction, but they can stay at your hotel, of course, especially if it wouldn't cost you any extra. So heads up there, watch out. An accountant will help you through navigating those type of things. And then something else I'd like to bring up too is what kind of receipts they expect you to have. And I like to use cash as a good example here, just because cash is so much murkier. So what I recommend you do is when you go to the ATM before a big trip, maybe like an international one that's going to have more cash, you get your receipt, and maybe on the back of it, as you spend your money, you're just outlining what you're spending it on. So $5 here, $10 there, and that can be used as a receipt to validate a business deduction.
That makes sense. I have to say, and you probably get this all the time, right when you started talking about that, I just think of the Schitt's Creek episode where he's like, "You just deduct it." It's well, who's paying for it? I've honestly never understood it either. So, like, how do
I get
you?
that
I know.
meme sent to me regularly, so that's perfect.
Yes.
You're
It's
exactly
like
on.
I'm writing it off. Who's writing it off? I literally so a question on that though is like the example you gave with like the Mexico City hotel, is there a way to know if something is going to be deductible or not deductible? Or is it just your judgment? Like,
It's a little bit of judgment, but there are IRS publications that you can reference. Now, I'm going to say the thing about the tax code, of course, is you can't have a rule for every single situation. So it's really helpful to understand the spirit of this. So what I try to think about, especially for a business travel deduction, is this necessary? Are you seeing a customer? Are you trying to expand a market? Why are you doing this? If you know in the back of your gut you're doing it because you really want to, it's fun, and you're going to try to do some business, okay, yeah, we understand that there's a little bit of a gray area. I think we all can know and follow our gut what is appropriate. But yeah, there's definitely a lot of gray area in this section, and that's why it's helpful to have professionals around.
I was thinking that too, because it's especially like when we go to a lot of conferences, and
Yeah,
if the nicer hotel is where the conference is at, and obviously you want to stay at that place, like, what is the thing? So yeah, there's a lot of
that
questions, a
seems
lot of gray area.
pretty reasonable, right? To stay in the same
Yeah.
place the conference is. I feel like I feel comfortable taking that. I think it's did you upgrade to the presidential suite? Did you need to do
Mhm.
that? I don't know. And again, problem and the good part about this is that you can really make an argument. Maybe that is necessary. Maybe you were meeting with a lot of high net worth individuals and that is appropriate, right? You can make an argument, but generally speaking, yeah, it needs to be ordinary necessary.
Yeah. It's so interesting. Yeah,
Yeah.
there is a lot, and I think that's the biggest thing you said is, like, writing it down, like,
Mhm.
so important. It's so easy not to, like, it's so easy just to be like, "I'll figure that out later," and it's like, "No, just take 1 minute, do it now."
The lesson in your head when you make that decision, you're gonna say, "I'm gonna remember it. I'm not even worried
Mhm.
about it. This is such a big deal." 6 months from now, you're not gonna remember anything, and that is something that anyone listening now can take action immediately, is start documenting real time, because everything you can do now is really gonna bolster any kind of argument that we're gonna have to make, is write it down real time and to get the details.
Yeah,
Yeah.
it's important.
Yeah,
Very good.
definitely.
Oh, man,
Yeah.
that's a good first tip. So what is the next one? I mean, that one right there is,
Bring it
like,
on.
really good.
Good, I'm happy to hear it. So the next one, and I get this conversation a lot, is the home office deduction. Rumor has it, and I think this is kind of before COVID, that the home office deduction is an immediate red flag to get an audit. I personally disagree with that statement. I don't have any, statistics to prove it. But post COVID, we all know we're all working from home. That's very normal. And so I get a lot of calls that say, I don't want to take a home office deduction because I don't want it to be a red flag. And I just totally disagree. Take a deduction as appropriate. If it's relevant, the IRS wants you to take it. So, backing up, a home office is a dedicated space in your home where you are doing work. The dedicated word's very important here, and I'm going to use the traditional dining room example. If you have a dining room table and you clear it off at 9 a.m. after breakfast and you're working all day in there, and then you move all your work stuff and you have dinner there with your family, that's not dedicated. That is just a shared space where you're working. The IRS wants you to have a space in your home that's always there. It doesn't have to have a wall or a door even, but it just needs to be dedicated. And if you're ever wondering or nervous about that, take a photo and put that in your files. Literally, that can help in an argument there. And then you can take that. So you can have your actual expenses, which is a little bit more complicated, but generally gives you a better deduction, which is a portion of your mortgage interest, your property taxes, all your utilities. So if you're up to track that, do that. Or you could take a square footage of that home office times $5, which is a traditional rate that the IRS determines. But take it, it's a really good deduction. And I just challenge you to start keeping those records for sure.
Yeah,
Do you have a home
that's
office, Stephanie?
I do, yeah. So I'm
Do you
at it right
dedicated
now, like
workspace? Yeah.
yeah. So what would qualify that? Like, is it just, like, having an actual desk and stuff set up that you're like could you put like, this sounds silly, but could you literally put, like, a TV tray and be like, "Well, it stays there and all my stuff is sitting around it," or like
Maybe, but that would only be what, 2 feet, and that's only a
yeah, that's
$10
true.
deduction. But yeah, that's a
Mhm.
good point. That is dedicated, I would say. It might not give you that good deduction you're looking for, right? But something, so I have an office. I'm in my office right now, so I don't really have a home office deduction. But I would like to bring up another point, which is there's also a deduction that you can have a home office at home and a rental property, or sorry, a rental office that you're actually officing out of, even if you own it. And so it really just depends on how you're set up. So definitely communicate that to a professional. And I think if these are the type of questions that you're facing, I think it's time to hire a professional so that they can walk you through this kind of documentation requirement and things like that.
That's true. I know I would need one ASAP if I because if I were running it because I'm like, so many questions. Oh my gosh, it's also a very good excuse to carve out a little place if you don't have a home office. Be like, you know what, family, we're gonna need to carve out some space for tax
Exactly.
purposes. Like, I
Exactly.
like the
Do it,
hack.
do it.
Yes.
Yeah, absolutely. Perfect. So that's the home office deduction. There's so much more that we could get into on this. And so if this is an area of interest, there's so many blogs online. There's so much IRS stuff about it, especially recently. So please, I challenge you to go study this area because this can save you some money.
Yeah. Save money. Heck yes.
Let's do
Love that. Okay.
it.
Yes. I love it.
Absolutely. So our next tax tip is actually going to be something that we all talk about, but no one's keeping enough documentation, and it's the good old mileage deduction. We talk about this a lot. I definitely think in the travel space, it's really relevant. But a mileage deduction is something that's available from the IRS where you track your mileage and then you get a set rate from the IRS. Last year was 65 and a half cents, and that changes. It's already changed for 2024. And so you can take all your business mileage times that rate, and then that's your tax deduction. What people are missing here that's going to put you at your biggest risk, I'd say, is keeping that mileage log. There's a million apps to do it. Get an app, do the QuickBooks app. I personally use a Google Sheet where I'm writing where I'm coming from, where I'm driving, the mileage, and kind of a description of why I'm doing it. Um, I think there's some obvious mileage deductions if you're going to visit a customer or a client at their home to do a meeting, but there's also a lot of things that people are missing. For example, when you're going to buy office supplies at Costco, let's say, that's business driving. So track all of that. Going to the post office, buying Christmas cards for your employees or something like that. That's all business mileage. So track it and just have that in your records. The IRS wants those records. If there was ever a question, it'll be a requirement, or they could actually disallow that. And no one wants that.
Yeah, that's really interesting. Oh man, that would be quite a thing to track, but that's amazing that they have apps for that.
You just get the app. Yeah, I
Yeah.
don't do that much my driving. And I'd like one point is your commute is not business driving, which is something I get a lot. So I'm sorry if your office is an hour away, but that doesn't mean the IRS is going to give you credit. It's where it's driving from your principal place of business anywhere else. So if that's your home, that actually is a nice deduction because everywhere you go is away from your tax home, and that's business driving. But if you have an office, that commute from home to your office generally is not a tax deduction. So sorry about that. Wish we could have it.
I was literally thinking that in my head. I was like, I wonder if you have to drive to a coffee shop to like, get away and have your own little office or driving. But yeah, I figured I was like, that seems too good to be true on that
It
one.
is a little,
Yeah.
and I know what you mean. A lot of people ask me that question, and I wish I could, provide say the answer is yes, but no, that's just because you want to do it. That doesn't mean the
Mhm.
IRS is going to give you credit. And do it. Go to the coffee shop if that's going to make you more productive. We don't want tax decisions to change everything about your business. We want to enhance what you're already doing and try to save you some money. That's what I always say.
Mhm. Or
Yeah.
a little hack, go to the coffee shop, meet a client, then that way you get your coffees and then that you
Becomes a tax deduction.
ha,
Exactly. And you get to see your clients in person, which is always better,
yes.
right? Can be better if you
Yes.
can, but
Look at this. I'm already thinking like a tax
you
expert. I
are. And I
love
like what
this.
you're thinking is that you're already doing something. How can I bolster that so it becomes a tax deduction legally? The answer is usually document it and do what you do. Leverage what you're already doing. Bring a client, bring an employee with you. Okay, let's get coffee together. And now it's business driving potentially.
Mhm.
And you
Look.
can deduction on the coffee.
Yeah, that's awesome.
Exactly.
Love that.
Another really good easy one that I think a lot of people miss is your cell phone deduction. We all know we're all using our cell phone, we're texting our clients, we're checking our inbox. I'm looking at my calendar all day long. So there is an available deduction for the business portion of your cell phone. The reason I say that so distinctly is if you have two cell phones, one for personal and one for business, it's very obvious that to me, excuse me if it's not, but the answer is you can always deduct your business cell phone in its entirety. But if you have one cell phone, you can deduct up to the percentage used for business of your personal. Yeah. So what's that? You're going to use your judgment, just like everything. So, what I would do if I was a taxpayer trying to bolster up my tax deductions and get, kind of all my eggs in a row here, is I would make a little document in my internal drive of my business. And I would say, generally, in a week, I use my cell phone 70% for business. And that it's just like an internal policy that you keep that you can always refer to. And that's the percentage we take. The next question is going to be what made you pick 70? And I'm going to say because I work XYZ amount of hours in a week and I'm always using my cell phone at work or something like that, right? There's a lot of just like logic that we can follow to decide that percentage.
And one thing that just came to my mind too is with your the mobile devices, is it only count if you're actually talking on the phone or does it count also if you're like doing emails, like work stuff, it's just not
Absolutely
actually
counts for all
talking?
that.
Okay,
Agree. Yeah,
cool.
apps, texting. We all know we all
Mhm.
text a lot these days. A lot of email on our phone, Zoom, all that sort of stuff can bolster that argument that that percentage is business.
Awesome. Cool.
Yeah. And even so, like, and I'm just what this is what I do is I'm always looking around, like the headphones that you have on right now, that's a business deduction if you were to go and buy those for your conferences, right? It makes your audio sound better. You're going to be using them to not disrupt your team, whatever the case may be. Business deduction. Run it through the business account.
I hope everyone just walks away from this episode just looking for all the tax
Exactly. Or
deductions
like,
now.
did I track that? Did I remember to
Yeah.
write that down? But one thing before we all get too excited, sadly, is these deductions are only available to self-employed people, right? So if you're a W-2 employee, there's nowhere for this stuff to go. So if you have a lot of out-of-pocket stuff, talk to your employer to get reimbursement. But unfortunately, the IRS won't help you out.
Yeah. That is one
So
of the things. But
yeah,
it makes sense. It
it
does.
makes sense. And things change quick. You never know.
Yeah, that's true.
Okay, so I'm just gonna go to my next note over here really
Oh,
fast.
yeah, which tip are we on now? So would this be
This is number 5 already,
Oh, okay.
and we're moving quick. So something that I think is really relevant to this conversation in the travel space is what I like to call promotional items. I don't know if you've seen a lot of this, Stephanie, but It seems like what I've seen is in the travel space, after someone books with you, maybe they send you like a really cool luggage tag, or they sent you like a gift for booking with their company, right? Those can be considered gifts, and gifts have really low thresholds for being a deduction. So instead, I would challenge a business owner to brand that the gift that they're going to already be giving someone. And then all of a sudden, that is now an advertising expense, and that is 100% deductible. So if you're already sending out these promotional items, just make sure they're branded, which, if it's promotional, hopefully you already are, but let's call it advertising and not a gift, right? So a good example I use is for a bottle of wine, which is a gift a lot of people give out, especially around the holidays right now. Put a big sticker on it with your name, and now it's an advertising tool. It's simple as that.
Oh, that's really smart. Because I was
Yeah.
actually another thought that I'm having, because we did a webinar a couple months ago where we were talking about how to like surprise and delight your clients, and a lot of them will
Ooh,
do like, yeah, it's really cool, and they'll do these really amazing like pre or post small gifts. So if that's not branded, because like sometimes they would be like, oh, here's a gift card to use for Amazon for
absolutely.
any last minute purchases, like would
It's
that
like, well,
still count?
that to me, that is also a gray area, and this is an amazing question. Um, I without more context, that to me sounds like a gift. And
Mhm.
so that you can absolutely go and buy that for a customer, right? If that's going to get you really good return, you really want that to be a customer that comes back, or you just really like them, right? You don't even have to have a why am I doing this reason. You can absolutely still do that. You might be able to only deduct $25 of it. Keep that in mind, right? So if you spend $100 on that gift card, 75%, or sorry, $75 might not be able to be deducted on your tax return. That might be totally okay though. As an accountant, maybe that's an unpopular opinion, but I say if that's good for business, do it. But it does sound like a promotional gift to me, and that will
Mhm.
have that limit.
Yeah, and but I do like the idea though of just having the sticker, like, if you do have, like, a bottle, that's a great
That's
idea.
Everyone needs stickers anyway. I want stickers. That's my next order.
Oh, yeah, I mean, look at my water bottle. I just have stickers beyond
See,
stickers,
you could
so
be
we love
branded Go Hardin.
exactly. I love it.
Love it. Okay, so I think that's also just like a really actionable thing to do from a tax planning perspective, is just to make sure that whatever gifts you're giving to your customers, brand them, and then at least you can get a little bit of the tax benefit of it. And so, and especially right now, it's the 13th, maybe everyone's that we're recording this, maybe everyone's already sent out their Christmas gifts, but if you haven't already, here's your opportunity.
Mhm, exactly.
Yeah, perfect. Okay. What else do we have here? We're just going right through these. So there's two more that I want to talk about kind of together. There's just some specific caveats that I think a lot of people miss. And I created this list for this podcast because I have conversations with hundreds of business owners throughout the year. And these are the questions that I get. And so if these are obvious to you as a listener, good. That means you're already doing them. But maybe we could even bolster some of these expenses, because I get a lot of questions of how can I save taxes? I'm spending so much on taxes. And usually it's refining things that you're already doing. You're probably not missing some giant hole of something that's creating this huge tax liability. It's what are you already doing, and do we have all the expenses that are appropriate and we are deducting them? So anyway, if there's always something to learn, is the point I'm trying to make on these. But another one is education. Education is taking courses, getting better at Excel, learning a new skill. And if those cost you money, and they're relevant to their business, that's absolutely deductible. And that's for the business owner as well as employees. My caveat to that, and like every tax tip, is there's always a caveat, is that if you are going to become certified in a whole new line of business, that is not a business deduction against other business income. Um, as a CPA, I'm constantly doing continuing education. This space is always so dynamic, so I'm always having to learn. But if I went to go become a real estate agent and get my real estate license, that's not really connected. And so therefore I can't deduct the cost of those courses. But my normal CPE stuff I do, you can. Does that make sense?
That does. So it would be
Okay.
basically like, if you decided to go get, um, like a travel advisor wanted to brush up on their marketing, so they would go do that. And it's like that's not. But what about if you wanted to do an education course to learn more about like a new destination? Like,
I
would
think that's
that?
absolutely a business expense. I think that makes you
Hmm.
a better advisor, and I think if you and your team could do it, that would be amazing. You could sell better, you can provide better intel for your customers.
Hmm. That makes
I think
sense.
even a technical skill would be really helpful. Like if you wanted to go get better at G Drive or using a software and you had to pay for a course, that's absolutely appropriate. But if a travel agent wanted to all of a sudden become certified in forklift driving, handy, but not a business expense, right?
Hmm. Nope. That make
Yeah.
that.
Still go
Yes.
do it, but maybe not keep it on the tax return, right?
Yeah, but that's really cool though that you can put that on because that is a big thing in the industry. It's just the furthering education, like
Sure.
on new destinations, new types of travel, all that kind of stuff. Just that's seriously so amazing that you could do that,
Yeah.
which is
Yeah. We're
awesome.
all trying to get better, learn more. And so at least the IRS is giving us a little credit there. So
Yeah.
absolutely. And then related to education, I guess, well, kinda, is that this concept of just office expenses. Relatively obvious if you buy pencils and pens and paper and business cards and all that sort of stuff. What I think people miss is things that you already own that you actually contribute to the business. A good example of that is like a desk. So the desk I'm at, I already owned, and so I brought to my office and I like kind of gave to my business. I can actually deduct a reasonable amount of that desk, so like the fair market value of it. So I went on Facebook and I found the same desk I have on Facebook Marketplace was selling for like $200. So I think it's totally appropriate and per the law to deduct $200 worth of a desk that you gave as a capital contribution into your business. Another good example is like I brought a speaker from home so that we could play music at the office, and now it's a business asset. I think a lot of people miss that, especially in their first year when they're giving all their home office set up and they're getting a new or they're moving a bookshelf in there and moving a big chair. That's all deductible.
That is interesting.
Yeah.
What does it have to leave the home space? So what if because I know there's some that will almost turn part of their home into like their office and they might have, somebody come in, but like would that count still if
Yeah,
you're
yeah. If you moved, let's say you had let's use that bookshelf again. If you had a bookshelf in your bedroom and you're like, okay, I really need to store my office supplies for my new business in my newly set up home office, yeah, that's definitely business. It's now converted into that.
my mind is I'm mind blown.
This
It's
is what
amazing.
gets missed when you're
Yeah.
doing your own tax return. These are how you bolster and save money long term, is like these little nuances that you only really learn by doing this podcast, reading, or like working with professional.
Mhm, and just also taking all the notes and everything. So it's also good that we're
Totally.
doing this before the new year, and it's so now if you haven't been doing this, which I there's probably so many because like, we're busy people,
We're
it's hard to
busy.
do
We're doing
that.
other stuff. Yeah,
Yeah, and so now you can start the new year, get that app on your phone, start tracking. I mean, that's the thing. It's just tracking it.
absolutely. And now it's mid-December. All these things come up January, February, March. If we're thinking now, it makes that time so less stressful. And actually, this is a question to you. When's the busiest time of the travel agent world, do you think?
Well, it's funny you say that
Summer?
because it's kinda like it's ever since the pandemic, it's like nonstop pretty much, but we
Good.
are coming I know, it's been great. So it's so funny. So there's been ebbs and flows and it's like kinda not stopping. But wave season is coming up, which is, towards like the beginning of the year when a lot of people start planning in January, like to the spring, like really planning a lot then. So we're coming up on a very busy time, like which even
So
before the
adding
pandemic.
tax planning sounds really stressful when this is
Yeah.
y'all's busy time. So anything we can do now or document now so that you don't have to worry about it, gold. Do it now
Mhm.
then, it sounds like, is what I'm hearing. But I'm really glad to know that it's busy all year. That means that there's more than enough to go around for everyone, and we all got stuff to be working on, right?
Oh, yeah, it's been really crazy. It's awesome to hear, and I know it's also really insane because it's, coming off the pandemic and then it's just, like, been, but it's cool to hear in the industry, like, it's really bouncing back and it's
So
but
happy to
you're
hear
that's a
that.
good point though, that this is all the tax season hits right when wave season is. Lucky us, right? Like, wow.
Lucky
Like,
us. Yeah, yeah. Okay, well, those are my kind of tax tips that relate to like certain deductions. I also have just like a few other things I'd like to hit on for other handy tips as a business owner myself and who works with others. This is just things I see that I'm constantly reiterating, reminding, all that sort of stuff. But one of the easiest things that you could do today to help you is separate your business and your personal spending. Um, the reason I say that is not only because of the compliance requirements, but like we talked about earlier, it's really easy to think that you're going to remember what happens all year. I don't know why humans do that. You won't. So separate it and use your credit card as appropriate because at the year end, when we're looking through all your stuff, you're going to miss so many things, especially if they're mixed. Cool. Do
mhm.
it. Do it now. That's another actionable thing that you can take from this podcast is do it now. Um, Another thing is pay yourself. A lot of people, if you're a single owned entity in this space, which a lot of people are, the metaphorical us, we're scared to pay ourselves. All you do is transfer money from a business account to a personal account. And it's really that easy, assuming you don't have any special tax deductions, of course. And pay yourself for a job well done if your company can afford it. There's a lot of internal stuff that happens, that makes you work harder if you're getting paid for your hard time that you're putting in. So I think it's like a mental thing, and it really is that easy to transfer. So I just like to do that. And something that is really relevant in my final kind of general tip is build in frequent spending reviews to your company on a set frequency. I think monthly is really good initially as everyone gets kind of organized and used to it. And then once patterns are identified or you have a really good understanding of your business, that can be moved to quarterly. But I still think monthly is the way to go. There's a million reasons to do it. One simple just being that if there was a charge on your business account that was inappropriate or wrong or whatever, you need to find out quick and get that money back and resolve those things quickly. If you're doing it 12 months, 14, 15 months later, you don't know. You already lost it. I mean, it's not the end of the world, but I think that's just good business practice to get in that habit.
That's a good idea. Is it putting,
Yeah.
some time on your calendar once a month to
Yeah.
go
Yeah.
back? Mhm. No, that makes
Absolutely.
total sense. And with the count on the calendar, so the dates that are really important to note, like, what
Let's go
are
through
those?
that.
Yeah,
Yeah.
because I know there's a lot coming up.
It's about to go down with the in the tax
Yeah.
season world. So the big day is April 15th. That is when most people need to file their tax return. And if you don't file, you need to submit an extension. A lot of people don't like that time. They're not ready, and that's okay. So many people extend, but you can avoid a lot of heartache by just submitting a simple form. You can do it yourself. You can mail it in or hire someone to do it for you. It's called the 4868 extension form. Do it. So that's April 15th. If you are a pass-through entity, you're a partnership, an S company, your deadline's March 15th, so even sooner. And then if you need to make quarterly estimated tax payments, because hopefully we're all making some really good money, the IRS wants their chunk of it. You need to pay that over the quarters, one being April 15th. So not only do you need to get your taxes filed or extended, but you need to make a payment for the next year that day. And then the next one's June 15th, September 15th, and January 15th. So every quarter we got a deadline. Um,
Whoa.
yeah, yeah. But if you think about it as a self-employed person, you are not remitting your taxes real time through a traditional W-2 wage. And so this is the IRS's alternative to that, is they want you to be paying your taxes in real time to avoid some kind of cash crunch. A lot of people don't make those payments because of cash flow reasons, and that used to not cost us a lot. But as of right now, the IRS is charging about 8% late penalties on that. So that is now significant, right? And that's getting our attention a lot more. So it's a motivator to pay in real time.
Yeah. That
Yeah,
is quite the motivator, I'd have to say. That is it's
8%. Yeah.
yeah, and so if anybody was interested in, like, finding you and exploring more, learning more, where can they find you at?
Totally. So if you go to my website, gohardin.com, you can check out more about us and you can submit an inquiry, and I will personally reach out to you and see if I can help you out. We do bookkeeping help, tax return preparation, tax planning. And if you just need a business advisor person to be on your team to ask questions to, I'd love to help.
That's awesome because I was also gonna say is, like, how do you know when you need it? If I already decided during this podcast, if I ever run my own business, I am going to get a CPA ASAP because I have so many questions. But how do you know
Absolutely.
if you need one? Like, how will you know?
So I have my own answer, and I've actually kind of been surveying people. A lot of the answers I've been getting is find a CPA as a part of your starting of your company so that at least you have that initial relationship. Have a meeting with them to understand your relevant compliance deadlines, walk through what to expect, even if you decide not to work with them all the time. My answer is once your hobby, if it starts as a hobby, becomes your full-time job, you need an accountant or at least a relationship with one so that they can help you out too.
That makes complete sense. I like
Yeah.
that. Well, this has been incredible, and I know we're not even done yet because we're gonna do a bonus episode after this, everybody. So check out the bonus episode. But first of all, to get into the bonus episode, because this was all, and also I have to say, I remember that you said this isn't always the most like sexiest topic, but this is riveting to me. I'm like, this is very
Good.
fascinating. So
Well, because
I
it impacts
wow.
all of us, right? Like
Yeah.
we're all death and taxes is what they say, and they mean it. In my opinion, we all got this problem. Let's all work together on it, you know?
Yeah, it's so that's a good way. That's very true. And so
Mhm.
the next in the bonus episode, what we're do can you share because we're gonna basically take it a step further and talk about S corp. Now, I don't even really know everything what that means, so I'm gonna learn a lot. But can you share so if anyone wants to go explore that episode, what that's about?
Absolutely. So this part of the episode was what I like to say, this is the you're at the beginnings of tax planning. You're a new business, you're starting to figure out what's going on. If this was second nature to you and you're like, I've been doing this for years, what else? What else can I do? That's where this bonus episode is going to come into. This is level 2. This is class 201 of the 101 is because I would not advise someone to be in an S corp if they don't have a really good understanding of what we just discussed. So that's what we're going to go into in the next episode.
Awesome. Oh, I like that. Well, I will see you on the next episode. And I just want to say,
Beautiful.
thanks to everyone for tuning into this episode of the Lounge with Travfi Academy. And of course, to our special guest, Haylie, for joining us today. And be sure to subscribe to our podcast or subscribe to our YouTube channel for all of the latest episodes. And we hope you enjoyed our conversation today and join us again. But for now, stay safe and we'll catch you on the next flight and maybe see you in the next bonus episode.